So you tell me getting a mortgage is like navigating a minefield?
Well, not exactly a minefield, but there are definitely some common pitfalls people stumble into. It's more like a really important game where, knowing the rules ahead of time can save you a lot of stress.
Okay, I'm intrigued. What are these rules then? What's the biggest gotcha?
The biggest one, keeping your lender in the loop. Life happens, right? Jobs change, finances shift. The key is to be upfront about it. No surprises.
So transparency is key. Got it. But what if I'm just starting the process? What's the first thing I should be doing?
Honestly, download a mortgage app. Seriously, it's like having a mortgage guru in your pocket. You can track rates, set alerts, and even start your application. It's a game changer.
A mortgage app? I didn't even know those existed. Is it really that helpful?
Absolutely. Think about it. Instant access to rates, personalized alerts, and a streamlined application process. Plus, you can track your file from pre-approval to closing. It's all there. And for expert guidance, reach out to Brent Knapp at the Loan Factory. He can answer all your questions and get you pre-approved. Call him at 817-881-2600 or visit loansbybrent.com to start building your file online.
Okay, good to know. So download the app, and if I'm feeling overwhelmed, call Brent. Makes sense. What's next?
Start shopping for property insurance early. You don't need proof right away, but waiting until the last minute can cause delays.
So don't procrastinate on the insurance. Got it. Why does it cause delays?
Because finding the right policy takes time. You need to compare quotes, understand the coverage, and get all the paperwork in order. Doing it last minute adds unnecessary stress to an already busy time.
Okay, makes sense. What about all the paperwork? I always feel like I'm drowning in documents.
Keep recent pay stubs, bank statements, and other financial documents handy. The more organized you are, the smoother the process will be.
Any tips for staying organized? It always feels like a scramble to find everything.
Create a dedicated folder, either physical or digital, and keep everything in one place. Scan documents as you receive them and label them clearly. Trust me, it will save you a ton of time and frustration.
What if I'm selling my current home at the same time?
Provide all documentation for the sale, like the sales contract and closing statement. Your lender needs to see the details of that transaction.
Makes sense. They want to know where the money's coming from. What if there are delays with the sale?
Communicate those delays to your lender immediately. Transparency is key. They can adjust the mortgage process accordingly.
What about large deposits or balance transfers? Do I need to worry about those?
Yes, keep a paper trail of any large deposits or balance transfers between accounts. Lenders want to know where that money came from.
So, no suddenly becoming a millionaire without explaining where the money came from. Got it. What counts as a large deposit?
That depends on your overall financial picture, but generally, anything significantly larger than your usual income should be documented. When in doubt, ask your lender.
Okay, good to know. Now let's talk about the don'ts. First up, quitting your job.
Don't quit your job without a new one lined up, and if your employment situation changes unexpectedly, let your lender know right away.
Seems obvious, but I guess people do it. Why is it such a big deal?
Because your income is a major factor in getting approved for a mortgage. A sudden job loss can throw everything off.
What about changing banks or moving funds around?
Don't change banks or move funds within accounts or keep it to a minimum. This will prevent additional documentation requirements.
So stability is the name of the game. Why does moving money trigger so much scrutiny?
It's all about verifying the source of funds and ensuring there are no red flags for money laundering or other financial crimes.
Okay, makes sense. What's the next don't?
Don't be late on any mortgage, rent, or credit payments. Continue paying every obligation on time.
Another obvious one, but worth repeating. How much does a late payment hurt?
It can significantly impact your credit score, which in turn affects your interest rate and your chances of getting approved.
What about applying for a new credit card or making big purchases?
Don't apply for new credit cards or purchase other items on credit, even with deferred payments. And definitely don't buy a car.
A car? Why is that such a big no-no?
A large car payment can really mess with your debt-to-income ratio, making it harder to qualify for a mortgage.
Okay, no new cars, got it. What about closing credit card accounts or consolidating debt?
Don't close any credit card accounts or consolidate debt or credit cards. This can negatively affect your credit score.
So even if it seems like a good idea, it can backfire?
Exactly. Closing accounts can reduce your available credit, which can lower your credit score, and consolidating debt can sometimes lower your score in the short term.
Last but not least, co-signing a loan.
Don't co-sign on a loan for anyone, even if you're not the one making the payments. It increases your debt ratio and will affect your qualification.
So even if you're just helping someone out, it can hurt your chances of getting a mortgage.
Absolutely. Lenders see you as responsible for that debt, even if someone else is making the payments.
Wow, that's a lot to keep in mind. Any final words of wisdom?
Just remember to be transparent with your lender, stay organized, and avoid any major financial changes during the mortgage process. And if you have any question or need help getting pre-approved, reach out to Brent Knapp at the Loan Factory. You can call him at 817-881-2600 or visit loansbybrent.com.